All right. So today's SPY was up 0.54%. We're getting very close to that price target, right around 489. And as you can tell from the arrow, we're getting there about where I expected. And if we break through that, then we're starting to look at some type of blow off top scenario. But if you look at the price action, we are pushing on that upper Bollinger Band. So we're likely going to just continue staying between the 5 EMA and that upper Bollinger Band to continue this trend. If at any point we break down below the 5 EMA, this trend is getting a lot weaker and we could start to pull back. But keep in mind, even if we get a pullback, we're likely just going to continue higher within this bull trend until we see some damage to the structure. And as you can tell, this is still a very bullish trend with all these moving averages only picking up momentum. So even if we start to pull back, it's likely going to be a buying opportunity within a bull trend. So don't get overly bearish unless we start breaking down through a critical support zone, which right now is this level at SPY 478. On the NASDAQ 100 triple Qs, we were up 0.12% today, and we hit the price target right on schedule, which was that level just below 429. And just like SPY, we are pushing on that upper Bollinger Band above the 5 EMA. So as long as we could stay above the 5 EMA, it's possible we just continue to push higher. Now looking at the triple Qs, if we break through 429-ish, then we're likely going to start pushing towards 437. And another thing I want you to pay attention to is we do have this very strong bull trend, and we do have plenty of gaps to fill. So this gap right here at 423.70 did not fill yet, even though it got close to filling today. And yes, that gap is going to fill at some point in time, especially this gap down here at 413, but we just don't know when. What that means is even if we come down here towards 422 and start bouncing towards 437, then we could go fill that gap at a later date sometime in February. So just keep all of this in mind as you're looking at a market at all-time highs. You don't just want to assume it's going to roll over and die, because all-time highs means that we have no resistance. There will be levels that we find resistance at, and you can already tell this level at 428.66 is one of those levels because we've now failed to break it for 2 days in a row. But if we do clear through that level, then again, we have no resistance likely until 437, and that could start to lead to a blow off top rally. So yes, at some point we will fill these gaps, but we have no idea when. And right now we still have a strong bull trend, which means we're likely going to continue to push higher. So tomorrow, if we start to pull back around this gap fill, look for that as a potential support zone that we could find buyers at. In the Dow Jones, we were up 0.63% today, and we're getting very close to that price target right around 385, and we're staying bullish above 377. It's really that simple in the Dow, so don't overcomplicate it. On the Russell 2000 IWM ETF, we were up 0.83% today, and we did hit that price target at the gap fill just below 199. And as you can tell, ever since we hit that price target, we've just been going sideways, which is fine, and it's actually a good thing for the bulls that we're getting consolidation here, because now we have price action closing back above the 20 daily moving average, and we're very close to having the bull trend. So I think from this support zone right around 195, we could start to bounce and hit these upper price targets at 203 and 207. The Russell 2000 is simple as staying bullish above 188 and then 186. On the ARKK ETF, we were down 0.99% today, and we did fill the gap to the downside, and we're right at the support at 45.7. And if we break through this support, that's going to be bearish, and it means we're going down to 44 and that 200 daily moving average at 43. To get bullish, we need to start getting daily closes above 48, and then we should start to develop a bull trend. On the VIX, we're up 2.5% today, and the VIX is still in this bullish territory of no fear in the market. And as long as we have low fear in a bull trend, we're going to continue to climb higher. On Bitcoin, we're currently down about 0.4%, just below 40,000, and below 40,000, we're likely going to hit my price target at 38,000. If we break down below support at 38,000, that means we're likely coming down to the 200 daily moving average, which is going to be just below 34,000. In order to get bullish on Bitcoin, we need to start breaking above 43 to 44,000. On Nvidia stock, we're up 0.42% today, and we continue to blast through my price targets, which is why I constantly remind you not to short this stock. And now that we're above 615, we could start to push towards 633 next. As long as we're above this 5 EMA, this is a strong bull trend, and if we start to close below the 5 EMA, that is going to start telling us we're losing momentum. On Tesla stock, we were down 12% today, and Tesla did crash down after earnings, which is why I always tell you it's very risky to play earnings. Whether you're long or short, it's essentially a coin flip on where we're going to go. And there's always the opportunity for very large moves during earnings season. Now that earnings is over and we're getting this very drastic sell-off, you could look for an opportunity for a dead cat bounce, but you have to realize now this is a very bearish trend while we're below 197. Doesn't mean we can't bounce. We likely will bounce next week. And that bounce I'm looking for is likely going to come from this level down here between 172 and 174. In the meantime, we may get a small bounce off of this level right around 182. And we do have this gap to fill just below 207 and a resistance level at 197. So we could bounce all the way up to 197 and then still come down here towards 170 and then come all the way back up to 207. So this is likely going to be a very volatile name, which is good for you short-term traders as long as you have a solid plan and you're managing a risk. On Apple stock, we are down 0.17% today, and we're getting very close to a brand new all-time high if we can clear that resistance right around 198. And we're staying bullish in Apple as long as we're above this breakout at 186. If we start to get a short-term pullback, it could take us to close the gap right around 192. And we have another support zone right here, right around 190. So as long as we're above support, you can buy the dip in Apple. And it does look like we are trying to make a brand new all-time high. So jumping back over to the S&P 500, this is a very bullish trend. And a lot of people will try to call a top. And there likely will be pullbacks. And there always are pullbacks. But until we break a critical support zone, this thing is going to continue to climb higher because it is a very powerful bull trend. So block out all the noise and have a disciplined and patient approach around how you're going to trade this around these critical levels. And with the end of January, it could be possible we start to see a deeper correction sometime late February or definitely sometime in March. So be patient. Do not short the market just because you think it's going too high. Markets that make all-time highs usually continue to go higher. If you want to come crush the market, come join us over at Bank Trade Alerts. And if you want access to all of my intraday updates and technical analysis, then you need to be in the Stock Channel Discord server. You can find out how to join Bank Trade Alerts or the Stock Channel Discord server in the links below this video. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.